Good morning. This is Chris Robinson, Robinson Ag Marketing, with today's pre-opening grain and livestock comments for Thursday, November 13th, 2025. Well, 13 is a lucky number for soybean bulls. I'm looking at the Jan contract, kids. Life of contract. Go back to November of 2023. We were up at 1269. We dropped down to this Christmas 2024 at 990. I'll call it 972. So that was nearly a $3 break, $2.97. 1120 was a huge number. We sat there for about a week and a half, 10 days. Now we pushed higher. The next upside I'd be looking at would be 1155. That would be a 62% retracement of that 3 year debacle. So overnight, a new high, the highest price we've had since June of 2024. June of 2024 till November of 2025. We're just going to call that we're going to call it an 18-month high. So the highest price for soybeans in 18 months. Kind of funny that it comes about a month after they were doing a story about how bad the situation was price-wise for soybeans. So what's the driver? I don't know, quite honestly. China has not yet purchased any beans from us officially. But again, the prevailing theory out there, which I tend to agree with, is the fact that these guys are buying their beans on the board so they can tell President Trump that, hey, we did buy our 12 million metric tons, which is about 90,000 contracts. If you look at the managed money right now, they're long 93,000 contracts. That's the spec funds, which we estimate. They're still short about 60,000 corn, about 75,000 wheat. So is there more squeeze to go for the grains? Right now, this is all about soybeans. Soybeans. Jam beans overnight up 7.75 cents at 11.41. Like I said, the next target that I'd be looking at would be just pure technical, 11.55. That's something I would watch. Now, when I point out targets, do not text me. Do not say you promised this, you promised that. That is insanity. Okay, and if you're going down that route, just assume you didn't even listen to me. These are targets. They are possibilities. They are areas to watch. If you're foolish enough to say, oh, well, that's where we have to go, we don't have to do anything. Okay. They're just targets. So people say, what's the next level? And these levels attract both buyers and sellers. So it's just something to watch. I always get periodically, you put 1,000 people in the room. There's going to be three of them that don't really understand what I'm saying. These are technical targets. They're not promises. They're areas to watch. And if you're a farmer or producer, we're using them to take advantage of the fact that we're up $1.22. That's $6,000 for every 5,000 bushels that you've held since October 1st. So from October 1st to November 13th, you picked up $6,000. I think that's something that you want to try and defend or take advantage of, especially if you were kicking holes in the drywall this summer when we were down, on our lows. I just can't stress that enough. This is all about taking advantage of moves. It's not about trying to be super trader and sell the high and then have your picture on the cover of some trading magazine. How I turned $100 into $1,000,000. That's ridiculous. You are a farmer. You're a business person. You need to reward rallies. You need to take advantage of moves like this. And again, if you can't bring yourself to sell the physical grain, I understand. The next best thing is to set a hedge. That's what we've been doing for years and years and years. 15, 20 years from now, if I'm still around, I'll also be saying the same thing. You've got to get your risk on paper, because guess what? Tomorrow we've got a USDA report. Now, we could get a bullish report and break. We could get a bearish report and rally. I'm not saying I know which way we're going to pop after the report, but the risk is, after a $1.22 move in 6 weeks, what do you think the risk is? Everybody who already wants to own it owns it. If the whole room is on one side of the room, what's the risk? The risk is somebody yells something and you can't get to the exit on the other side of the room fast enough. So if you have a hedge is, it's your exit hatch, it's your safety valve, it's your escape chute, whatever you want to call it. But that's what I'd be looking at. If you look at red November beans, 11.18 and 3/4. Again, a new high for that move. Actually got as high almost as 11.20, 11.19 and 3/4 last night. So great moves in the beans. Please take advantage of it, whatever that means to you. Corn and wheat, not part of the party. These corn up a penny. We are at the 200-day moving average. We've talked about that for probably all year, right? 200-day moving average, big resistance, big pivot, 436.25. If you're working with me, you know we've got targets right above here. So check your emails. I sent those emails out months ago. If we get to our targets, I will send out another text message just to remind you. But we are closing in on where we want to make some moves in D's corn if you're working with me. Red D's corn sitting there at 470, 469. 470 is the highest price we've had in 5 months. For whatever reason, for now, that seems to be big resistance. Again, if you're a producer and you're worried about next year, having D's corn at 470 is a lot better than having it down at 430 or 425. You got to look at it that way, glass half full. If you're growing beans next year, when we're at 17-month highs out there at 11.18, almost 11.20, that's something that is, I think, a blessing at this time of the year. So we're heading the right direction. I would just say start taking a look at defending some of this because we've got to get through this USD report and then the more important one, the one in January. The January report typically can be a rip your face off report if you're bet wrong, bullish or bearish. And since nobody knows what's going to happen on a report, what do? You get your risk on paper, kids. D-Sweet overnight of an 8-cent range, down 1 3/4 cent. The crop continues to get bigger coming out of South America for wheat, so there's no real story there other than if corn or beans can drag wheat higher. D's Kansas City down a penny and a half, 5.24. However, if you're an end user, right? If you're someone that uses a lot of wheat or um, um, even corn right now, wheat's still near its 5-year lows. It's not a bad time to start looking out there for, I call them disaster calls, right? In July. What if we do get a weather issue? What if something does happen where we get a problem with the weather in South America? The stage will be set. It's kind of like, the Kindle is dry. All you need is a lightning strike, right? So those calls out there are cheap. Again, they are not guarantees of profits. They are not guarantees of riches. They are hedges to defend against what would hurt your business more. And if you use a lot of corn or wheat, especially wheat, when we're at 5-year lows, why wouldn't you go out and buy some cheap calls just as an insurance policy against some weather issue? I just can't stress that enough. So again, it's not a slam dunk. It's not really an investment. It is a hedge. It's a hedge that'll pay off if we get a drought. If we don't get a drought, they won't pay off. It's just that simple. And I'm not going to sit here and promise you, hey, this is the way that you can, retire next year. All you have to do is get long, in front of a drought. I can't promise you that. It's just a hedge. Okay, moving on to the livestock. We were lower yesterday. Fat cattle finished the day down $1.40 at 224, almost 225, 224.95. Again, are we going to go do some work and try and fill those gaps above? We had such a big correction after a 10-month rally. Then we've had a little bit of a bounce since then. We saw a huge drop in open interest 2 days ago when we had that limit up day. And then we've kind of taken a breather since then. The area that I'd be watching, and again, if you want these levels, just sign up for my letter. They're in there every single day so you can have them to look at, so you can remember them. But there's a gap up in Fab cattle that gets filled at around 233.425. So we're trading at 224. So that's the bull target for anybody out there that's a chart person that believes that all gaps get filled, blah, blah, blah. That's the area to watch. In the meantime, if I'm a producer, what I do want to make sure is that, you have fat cattle at 224. I don't want to be holding fat cattle if we drop back down to $2 or 195. That's why we set a hedge. Feeder cattle. If you look at March feeder cattle, well, I'll switch to Jan because it's a little closer. Jan finished down $1.67 at 327.45, 327 half almost. What's the level there? Again, there's a gap up there. Are we going to go get it? I don't know. The gap is between 340 and about gets filled at 348. So, we're trading at 327 and a half. Is there $11 more on a spike? I have no idea. Okay. Again, if I'm a rancher, what I do want to make sure of, and I don't want to watch JN feeder cattle go from 327 to 290. So you set a hedge. And when we do correct, we get the type of correction that we had. It took 10 months to rally $70. And then what? In 15 days, we give a huge chunk of it back. It took 10 months to go from 256 to 380, right? And then in 15 days, we dropped from 380 to 311. You don't want to be on the wrong side of that without a hedge. Okay, that's it for the day. This is Chris Robinson, 312 638 8868. Give me a call, and we'll hope for a good day today.